by Nadir Thokan, who is an investment strategist at 27/4 Investment Services. Thank you very much for coming.
Yeah, thank you for having me.
Well, Nadir, let's start with the South African currency, which has significantly been under pressure this week, whether or not it had to really go to the 13 mark to 14 against the dollar.
Yeah, look, I mean, so we've seen a lot of rand strength actually more recently, and that's predominantly been on the back of a global economy which is very uncertain in terms of the outlook and the trajectory for growth. And what that has meant is that the US Federal Reserve and other central banks globally have had to put their foot on the brakes a little bit in terms of tightening monetary policy. And as a result of that, there's been this global resurgence in a search for yield, and money has piled into emerging markets which are higher yielding than developed markets. So to give you an indication of that, our 10-year bonds currently yield at just under 8.7%, and obviously US 10-year Treasury bonds yield at about 2%. So, if you're looking at that 8.5% or rather 6.5% yield differential between what's on offer in South Africa versus what's on offer in the US, and in fact in Europe, that yield differential is even higher, because in a lot of European countries we actually have negative yields on 10-year bonds. So that's what's been driving a lot of demand for emerging market credit and South African credit in particular. And as a result of that, we've really seen the rand on a firm footing. It was just a couple of weeks ago that we were flirting with a 15 rand 20 to the dollar level. Remember when we were talking about the Reserve Bank's mandate being under attack, when we were talking about the Reserve Bank considering growth as part of their mandate and not just price stability. We really saw investors getting a scare on the back of that, and the rand weakening quite significantly. So it really has been a strong rebound in the rand since that point, and we've seen that investors haven't necessarily been all that cognizant of the risks which have clearly been building. If you look at the fact that we've got municipalities, 25.5 billion rand of irregular expenditure from our municipalities. If you look at the ongoing news of state-owned entities which require more cash injections, Danel is obviously the latest state-owned enterprise requiring a cash injection. We're talking about sovereign debt exceeding 70% of GDP. If you add back the SOE debt, particularly Eskom's debt, back into the equation in terms of debt that's owed by South Africa. So investors not really all that concerned by all these risks which are pending on the horizon, and it's all about what's been happening in the US and the fact that the Federal Reserve is taking a much more dovish stance with regards to interest rates.
So let's take a look at Wednesday's reprieve for motorists when the price of petrol went down, but also looking at how the oil price has been under pressure, but at the moment still being below the $70 mark. Yeah, so look, I mean, so oil actually peaked above $70 at about just under $73 a barrel, and we're seeing that it's probably $10 a barrel off from those highs, and obviously motorists are feeling the reprieve of that, because remember the cut in the petrol price or the big drop that we got in the petrol price on Wednesday, that was before taking into account this recent bout of very strong rand, the very strong rand that we had. So, I think that hopefully what this means is that there's going to be ongoing good news on the horizon for motorists. Obviously tensions between the US and Iran definitely doesn't help the oil price. When we see those tensions flaring up, we do see the oil price go on a bit of a ripper and start to increase quite quickly. But the bottom line is that if there's going to be concerns about global growth slowing, that's going to be an environment where there isn't going to be that much expected demand for oil, and we could continue to see oil prices remaining quite subdued, which is ultimately good news for the motorists when combined with the much stronger rand that we've seen. Yeah, I'd like us to look at some of the corporate news of the week. Naspers' announcement of delisting in SA and going offshore, but secondly, the announcement of a CEO. Well, people were asking that how can you really announce that you are leaving the country, and secondly, you are going to shed jobs in the sector? Is this not a slap in the face of South Africa's economic ambitions that it wants to really turn around and lure investors back in the country so that it may create the so much needed jobs? Yeah. Look, I mean, I think this is a story that's actually quite misunderstood. So remember that Naspers is not exiting South Africa. So Naspers as a business, the majority of their operations as it stands is currently outside of South Africa. Remember that they're now a global technology platform and e-commerce platform that pretty much started with an investment in a Chinese company called Tencent
but they've now diversified into a lot of payments businesses outside of South Africa. PayU, a payments business out of Turkey, a food delivery business out of Germany called Delivery Hero. They had a stake in Flipkart in India, which they've now divested from, and a stake in a Russian e-commerce business called Mail.ru. So the majority of Naspers' value currently sits outside the borders of South Africa. They've got some media assets within South Africa, but that's a very small part of the overall business. So all the announcement that's been made, what the announcement says, that there's going to be a company called Prosus, which is going to be listed on the Dutch Stock Exchange with a secondary listing on the JSE, and this is basically to house all of Naspers' assets outside of South Africa. And the reason that they've decided to do this is because the market is actually valuing Naspers' stake in Tencent at more than the value of the entire company. So they're saying that this discount that the rest of the company trades at, we need to remove the structural discount, and we believe we can remove the structural discount by listing this business outside of South Africa. It's actually going to be the largest consumer internet business to be listed in Europe, the third largest business to be listed on the Dutch Stock Exchange. So it's going to attract a lot of interest from international investors. And what Naspers company management is hoping is that this is going to actually unlock the discount that the Naspers rump trades on relative to its stake in Tencent. So it's not necessarily Naspers exiting South Africa. Naspers is going to continue to hold their media assets in South Africa, going to continue to hold their e-commerce assets in South Africa, the likes of Takealot, One Day Only, and a number of other e-commerce assets in South Africa. They're going to continue to maintain those. It's just going to be listed within a separate listing on the JSE. So it's not Naspers exiting South Africa.
All right. Then on the other hand, Steinhoff, is it going to have objects in the rear view mirror getting smaller and smaller, or are they heading closer to another conflict with their former CEO for trying to get their money back?
Yeah, look, I mean, this is a messy story, isn't it? I think ultimately the fact of the matter remains that there's been about 220 billion rand of value that's been destroyed by Steinhoff, and there's obviously what we now know is that there's been fraudulent accounting practices going on and fraudulent practices from a number of directors. The company is claiming that they're suing former CEO Marcus Jooste to the tune of around 820 million rand to receive back pay as well as penalties on a number of fraudulent matters which they're claiming against Marcus Jooste. Look, I mean, I think the bottom line is that this is a company that's a shadow of what it was if it does manage to survive. They've managed to reach a deal with creditors to keep on going for the time being. They've obviously got operations all over the world, but the bottom line is that until this cloud overhang is removed from them, I don't see the company returning to its former glory by any stretch of the imagination. So unfortunately, yet another JSE disaster that's just destroyed value for shareholders, and it's going to be unlikely that we're going to see a recovery of that kind of value.
Okay, let me have a parting shot with you on looking at external factors. Christine Lagarde has to take over the ECB. What do you make out of that succession move?
Yeah, look, I mean, so it ultimately, it seems that it's going to be more of a political appointment than an economic appointment. The bottom line is that the European economy in composite is in a lot of trouble. They're really battling to get inflation going. They're really battling to get growth going, and they have to try their hand perhaps at something new in a desperate attempt to try and instill some kind of confidence that they're going to be able to tackle the very low economic growth rates that we're seeing in Europe and hopefully get some inflation going. So they've tried all measures of unconventional policy responses to try and get inflation and growth going within Europe. And I think that this is just yet another grasp at the straws, basically, to try and get some kind of inflation and economic growth going within the Eurozone.
Right, we're going to have to leave it. There's so much to talk about, and the week that was, surely it can't be without you. So thank you very much for making time to come and wrap it up with us.
Yeah, it's a pleasure. Thanks for having me.
Right. I'm speaking here to Nadir Thokan, who is an investment strategist at 27/4 Investment Services Company. We're going to take a break, and when we return, the program continues.